Is that correct?
Yes. So here's really what, we want to get out of today's session is when it comes down to risk management, there's several different components that go into it. Number one, you really have to be able to understand the instrument that you're trading, knowing what ATR is, the average trading range, how much does it move on any given day or over the course of several days or the course of a week or a month, depending on how you're trading. You also want to be able to know, you also want to be able to take a look at your own portfolio and say, going no more than 1% of your portfolio is what you're willing to risk. Doesn't mean that that's all you're putting into the trade. So if your max risk is, say, $500 on an account, that doesn't mean you're only putting in $500. That means that's what you're risking on the trade. Then the rest of it comes in on what we talked about with regard to making your entries precise. So if you're day trading and you're using a 5-minute chart to determine what your entries are, then on your setting your stop loss should be done on a longer term time frame. So I go out to a 15 or even a 30-minute chart to be able to draw my stop loss areas. If I'm swing trading, I'm using a 4-hour chart to make my entries. Then I'm going out on a weekly chart to be able to draw my areas of support lines. And that helps to make sure that if I'm holding a trade overnight and the trade blows through my stop, because I've set it too tight, it prevents a lot of that by using a longer term time frame and only going in with a certain amount of shares or a certain amount of contracts based on your risk to reward. The other thing that's really important to note, and this is really where you really want to take notes of, and a lot of traders don't understand this, is your expectancy ratio. So people will tell me all the time.
Tell me about that.
Yeah, people will tell me all the time, Bruce, I have a 70% win rate or an 80% win rate. That doesn't mean anything. It doesn't mean you have a profitable trading system. You can have a 40% win rate and losing 60% of the time, and you still have a profitable system, and vice versa. You can be winning 80% of the time and still not making money. How? Because it's important to take a note at what your wins are, what your losses are, what the percentage is there. That's one part of the equation. But you also want to take a look at when you win, how much on average are you winning? Just like kind of like a sales guy that goes out there and sells software. What's their average deal size? So maybe one month they sell, their average deal size was 100,000. Maybe some of their deals are 20,000. So you have to know what your average, what's your average trade size, what your average deal size is, what your average profit size is. So it's important to keep track of when you're taking a look at your trades, not only how many times you win, how many times you lose, but every time you win, you want to take a look at how much did I win? Every time you lose, how much did you lose? Because that's going to tell you a lot of insight. It's going to give you insight onto, am I controlling my risk? So if I have my stop set at $500, as an example, $500 per trade, am I blowing past that, or am I staying under $500? It's going to tell you that. It's also going to tell you on your winners, are you taking profits too early? Are you when you take your profits, are you winning $500 on average? Are you winning $1,000 per average? And if you are winning 500 and you're willing to risk 500, that's not a really good system either, because you want to typically have your winners targeted where it's at least 2, probably 3 times as much as what you're willing to lose. So if you're willing to lose 500, you should be looking at trades that can give you the opportunity to win 1,000 to 1,500. So that way, so now when you have losers and you're losing only $500 a deal, but you're winning on average 1,000, 1,200, 1,500, it absorbs those losses and allows you to lose more times than not. So all these things are really, really critical when you're trading. And you talk about risk management. There's a lot more to risk management than saying, this is where I set my stop and that's how much I'm willing to lose. There's a lot that goes into it. So it's all these finite details that make a winning system. Does that make sense, Jamie Duke?
Yeah. I know we're about out of time. So next time, I'd like to focus on how to maximize my gains.
Yep.
If we could, increasing the rewards of that reward to risk ratio.
Got it.
Because yeah, that makes perfect sense. Like you've got to have the rewards be a lot greater than the losses. If you have a 50-50 win ratio, oh well, but you got to have good gains if that's going to be the case.
Yep. It forces you, if you're doing 1-to-1, it puts you in a position where you have got to be spot on with your hit ratio. You've got to be winning more times than you're losing. But if you start to adopt the system, and we'll talk about this on our next session, and that goes back to stock selection or instrument selection that allows you to be able to get those type of movements. When you're able to go ahead and get, a 3-to-1 win ratio or even a 2-to-1, now all of a sudden you can say, well, I can, and you do it on paper, you calculate it. Now you say, well, I can lose more times than what I win, and I'm still coming out ahead.
Yeah.
That's the importance of doing that. So that also goes back into risk management as well.
Yeah. Yep. When can we do our next call?
Take a look at your calendar. I'll look at mine, and we'll jump on another call. Let's not make it too long. Let's not make it, 2 weeks, away. So take a look at your calendar and let's do it.
I would be fine with doing it probably sometime next week, maybe later in the week. So if you have any openings on Thursday or Friday next week, that would probably be optimal.
Sounds good, Jamie Duke. I'll take a look at my calendar and let you know for Thursday or Friday of next week.
Okay. Yeah, that would be great. Thank you for the session today. Appreciate it.
You got it, man. Did you learn a lot?
I think I'm picking up on a lot of to me, probably the most key part of the session was knowing how to keep trades from running away from me. I don't have as much issue with the day trades because I'm using a lot more, as soon as it goes below that, I'm out.
Right.
But on the swing trades, I had issues, not so much recently because I haven't been doing swing trading, but in the past, I've definitely had issues with my losses getting out of hand. So getting better ideas of how to prevent that is pretty key.
Perfect. All right, Jamie Duke, always a pleasure.
Yeah, absolutely as well. Yep. All right. Have a wonderful day. Bye-bye.
Bye now.